Good day, fellow investors. 10 months ago I made this video about 10 growth stocks and I received a great comment saying how all those stocks are down. So I really wanted to discuss growth stocks, hype stocks, which is a commonality here on YouTube, versus investing and why I'm not chasing those hype stocks. I also made a video about must go beyond sanity to buy BYND. I also made the video about the investing dangers of very good butchers, TTCF stock, Oatly, Basic Fit. I also discussed Palantir. And if we look at the performance of these stocks, Zillow, for example, which was in the large video, 10 stocks, 70% down. Palantir was recently discussed. Okay, now it's a little bit down, but pretty stable. DocuSign, so it has been stable. Now it has really crashed a little bit down. Okay, 40%, not that much. I told people to avoid NEO like the plague. I think it was somewhere in February, so it is a little bit down. I will put all the links to the videos I mentioned in the description below. Very good food. I received so much hate for trashing very good food, which for me was clear pump and dump. But okay, so those invested and are trashing me around didn't have such a great time. TTCF stock is still in the making, but trending lower. We'll see what is going to be there. Beyond sanity to invest in Beyond Meat. How did it do since the summer? Really great. Wow. But to make things fair, I also discussed Tesla over the last years, and Tesla did something really remarkable. So here it was mostly flattish, and then over the last 2 years it exploded with remarkable returns. Those that invested at the lows here made 25 times their money. So this is really remarkable. But when it comes to investing, okay, now that you made your money with Tesla, sometimes you will get lucky by investing in these stocks. Then you put it into the next stock and this happens, and that's what I argue, is that chasing these hype stocks is not a sustainable long-term investment strategy. And that is because of not stock price risk. Every stock can crash 50% in a matter of a few months. That's normal, that's a given, that's something acceptable. That's not analyzing business model risk. If the business model is not stable to any environment, that's why I didn't invest in Tesla ever. When it was cheap in 2019, Elon Musk came out and said that he was 3 weeks from bankruptcy. Bankruptcy means total loss. And if you get bankruptcy once in your compounding life, it's gone. Your money is gone. Hasta la vista. Bye-bye, baby. And that's why I always try to warn people against investing in such bets. The question is, how many will you get right? When it comes to investing, if we listen to Peter Lynch, then he says that if you get 4 out of 10, you get a great investment return. 4 out of 10 of great businesses with great earnings. If you get 6 out of 10 of great businesses, you are an investing genius like Buffett. With hot growth stocks, if you get how much? 1 out of 10. I'm just telling my story for value investors and why I avoid investing in such stocks. Plus, there is the current growth stock hype mania environment. I discussed it with ARK, the video that I made also at the beginning of this year. Also didn't end up well, a good year for ARK. Maybe they will recover, you never know. But it is simply high momentum, and that's something that I know maybe a little bit more than others. I just recently analyzed the complete Dutch stock market, and if you go to my blog, click on the first Dutch stock, and you have a link to the every traded stock on the Amsterdam Stock Exchange that I analyzed. And if we go to the analysis, there is a cemetery of companies like, let's say, this one, and if you look at their stock prices, this is the promise of growth. So crazy returns there, but if the business model is too risky, it really looks like this. And this is down 90%, so from a billion to 10 million. This is really insane, and I've seen plenty of this. The Dutch stock market is really a cemetery of such companies. Probably it's cheap listing there or hiding or whatever. But when you see that, the main message of this video is that you have to really analyze, okay, if that happens, if there is real business model risk, how does it affect my portfolio and long-term compounding? Everyone is focused on this stock is a 10x, a 20x, a whatever, but how does that focus on the compounding long-term if it goes wrong is something that many overlook. And to conclude here, it is first and foremost about character. Warren Buffett says that you either are a value investor or not. There is no turning, there is no this, there is no that. And I think that as long as there will be demand for getting rich quick, so forever, there will also be supply of companies like the vegan butcher that, oh, we're going to grow and take over the world, and you will pay $5 per share, but I will get shares at 25 cents if I am their lawyer, and things like that. So there will always be such schemes, and people will fall for them if they are so greedy that they want to get rich quick. And that's also something that we'll discuss in another video. Getting rich should not be and isn't easy, but it is doable if you focus on the right things. Hype stocks are not the things to focus on. What we'll do on this channel, we'll keep focusing on compounding, so if you're interested in that, subscribe, and I'll see you in the next video.